Today I'm sharing 5 hints to save on tax in the UK. If you aren't being smart about how you manage your money, then you're wasting cash, and the later you start doing it, the more money you are throwing away. These 5 hints can help you save on tax. Pension. If you aren't paying into a pension scheme, then you are paying too much tax. Pension is deducted from pre-tax income, which means you pay tax on a reduced income, which saves you tax. The government will top up your pension with tax relief, giving you a free bonus for saving for retirement. Your pension contributions are limited by the pension annual allowance, which is $40,000 each tax year for most people. Your employer contributes a percentage to your pension too. It's free money, so why would you not take it? If you're a UK resident under the age of 75, you can get pension tax relief on what you pay in, even if you don't work or pay tax. To get tax relief, your personal contributions can't be any higher than your earnings, or £3,600 if this is greater. If you want to contribute above the amount you earn, your employer might be able to make an employer pension contribution, although these are still subject to the annual allowance. Please keep in mind that pension and tax rules can and do change, and any benefits will depend on your circumstances. If you want to pay more than your annual allowance and are eligible, the carry forward rule lets you take advantage of unused pension allowances from your previous 3 tax years. This could mean you can make a contribution of up to £160,000 in some cases. If you aren't working for an employer, then contribute to a recognized pension fund, which invests in certain portfolios that grow your money. There are a few pension providers that cater for pension investors, so look around, do the research, and find one that suits you. You'll need to be comfortable making your own investment decisions, but you can add money before the tax year deadline, get the tax relief, and then choose investments in your own time. Or get help from somebody that is good at investments if you don't feel comfortable doing your own investing. What is pension tax relief and how does it work? To help you save towards your retirement, the government gives you money each time you make a payment to your pension. This is known as pension tax relief. The amount of tax relief you get usually depends on the rate of income tax you pay. The government will always give you 20% in basic rate tax relief when you add money to your pension, even if you don't pay tax or are a non-earner. If you're a higher tax rate payer, you can get up to 40% tax relief, meaning a £10,000 pension payment could cost you as little as £6,000. If you're an additional rate taxpayer, you can get up to 45%, but just be aware, you must pay sufficient tax at the higher or additional rate to claim the full 40% or 45% tax relief. Your pension contributions, including any made by your employer, are also limited by the annual allowance, which is currently £40,000 each tax year for most people. You must be under the age of 75 to get tax relief. There are also limits on how much tax relief you can receive and how much you can pay into a pension. You'll only get tax relief on personal pension contributions up to 100% of your UK earnings, or £3,600 if this is greater. That's if you're a low or non-earner. The next tip. Make sure that you reclaim overpaid taxes. If you're a non-taxpayer or your income unexpectedly falls during a year, you may find that you've been taxed more than you should have, as HMRC assumes your personal allowance is equally used each month. To reclaim, fill out Form R40 from HMRC or just give them a call. If you are filing a self-assessment tax return, any refund owed by HMRC won't be processed until it receives the money. Planning ahead and filing well before the January deadline means you may receive a rebate quicker, as the tax office is likely to be quieter. The sooner you file, the better. Be smart about how you manage your money. In 2022-23, you can earn £1,000 of interest on savings tax-free if you're a basic rate taxpayer. If you're a higher rate taxpayer, your tax-free allowance is £500. You will only pay tax on savings income that exceeds this threshold. This will no longer be deducted automatically by the savings provider, so if tax is due, you'll need to pay it via self-assessment or have it deducted via PAYE. Keep in mind that you don't have a savings allowance as an additional rate taxpayer. Next up, capital gains tax. Capital gains is the profit you make from selling certain investments, including second-hand homes, art, antiques, and shares. Capital gains of up to £12,300 are tax-free in the year 2022-23. Married couples and civil partners who own assets jointly can claim a double allowance of £24,600. Remember, if you don't use the allowance within the tax year, it's lost forever. You can't add your tax-free allowances together for different years. Next tip. If you are married, remember the marriage allowance. The marriage allowance is a tax perk that benefits couples where one partner earns less than the other partner. If you're married or in a civil partnership, you can transfer 10% of personal allowance from the lower earning partner to the higher earning partner, equating to about £1,260 in 2022-23. This potentially saves you up to £250 in tax as a couple. To qualify, the higher earner must be a basic rate taxpayer. Thank you for watching this presentation. If you found the presentation valuable, please consider liking, commenting, and subscribing so that you can receive notifications to more amazing content.